What's up? Good morning, good afternoon, and good night, wherever you're at tuned in here to BitLab Academy daily live streams every day, 10:30 a.m. Eastern Standard Time. My name is Kelly Kellum. Welcome to the show. We really try to basically bridge that gap from beginner to pro here, breaking down a lot of the things you see on a lot of other YouTubers' pages, but I'm really trying to make every attempt to bring the beginners along as well as giving top pro alpha here. So what I really want to make sure we do throughout building all this is build a positive, empowering, engaging, and educational community to where we can all be friends. We can all learn from each other. There's no trolls. We've got a great group of people here in chat. Alexandra G, Justin Eubanks, King Peasant. We got Mitch Shaw. We got so many people in here already. We've already formed a really strong community only after the first week. So welcome to the show. And today we're going to be breaking down some key signals that we're seeing, everything going on in the charts. Also a different lens on the charts to really help you dominate your portfolios so you can not only grow in your fiat dollar value, British pound, Japanese yen, wherever you're at in the world, Aussie dollar, Canadian dollar, doesn't matter. If we're trying to get out of the fiat system, why are we weighing all of our assets against those currencies? One of the things I like to do when I'm going through my portfolio, when I'm setting up like I am and like I have been for this next bull run, I'm getting my portfolio in order so that I can make sure that I'm dominating my portfolio, not in growth and gains in US dollar value, but also in the value of Bitcoin, because that's way more exciting. And in the long term, that's going to be way more productive. So welcome to the show again. My name is Kelly Kellum. Please make sure to hit that like button, hit that subscribe button, ding that bell. And if you haven't yet, definitely check out the bitlabacademy.com as well as all the socials there. And if there's ever any issue with any audio or video or whatever, I am doing this as a one-man show, all the production and everything. So, let me know in chat if there's ever an issue. I know last week we had a huge giveaway, which I'll talk about in a second. And for anybody that did win, I will be sending out that email today, midday after I stream, letting you know exactly how you can take advantage of those five lifetime memberships that we gave away. And there's going to be a giveaway monthly, and I'll talk about that right now. So again, my name's Kelly Kellum. Welcome to the show. Let's go ahead and dig into it. I hope everybody had a wonderful weekend. I know the markets have been exciting, and everybody's hoping they're just going to go up from here. But let's talk about that. Let's talk about what needs to happen in a healthy manner so that we can also map out some possibilities of where price is going to push up to, where it's going to pull back from, so we can get more entries, stack more, being prepared for the bull market. So without any further ado, let's go ahead and jump onto the charts. Let me know. I did adjust the frames and how the cameras are on here over the weekend. Sorry I wasn't on show live yesterday, but we had some really productive meetings here at the BitBoy Network, Hit Network, BitBoy Crypto, about all the stuff that's coming. And we have some huge updates. I mean, huge. We've been talking about it for months now, but you can't build Rome in a day, right? We have been working hard at work here. Obviously, we built this studio back in September, and since then, we've been filming tons of content for the actual courses and the private memberships over at BitLab Academy. So again, make sure you check out bitlabacademy.com, and we're going to go ahead and jump on into the charts here. So make sure you're following the BitLab Academy YouTube, Twitter right here, which is at Academy BitLab. Make sure this is the correct one you're following. There's a lot of scammers out there. Make sure to follow my Twitter as well. I can't even tell you how much stuff I post on my Twitter. It's all day long, every day. I'm right here up at 19,200 followers, really building a great community here. And we're going to talk about this a little bit today as well. I posted this over the weekend. But make sure, if you are watching this on one of our other channels like Hit Network. If you haven't checked out Hit Network, definitely check them out. And I'll pull that up in a second. But make sure you come over to basically youtube.com/@BitLab Academy. And we've got a ton of great videos here early on in this stream. Building this YouTube page. As I said, we're trying to bridge that gap from beginner to pro. So early on, I've been doing a lot of basically alpha content that really explains everything from how do you identify profitable trade setups. I just did a pro guide to TradingView. I did an entire stream with this as well, but I'm trying to do a bunch of to include short form content as well, so that we can keep people's education moving along for free. And when you do want to go deeper, you can come over here to bitlabacademy.com. And I really want to urge everybody, sign up for this newsletter, put your email in right here. And as you see, we did 5 lifetime membership giveaway for the first giveaway here, but we're going to continue doing giveaways once a month. And I'm going to do them around probably the last Thursday of each month. But we'll see how that is. It's going to be towards the end of each month. But we're doing one winner each month. And now it's going to be 1 free month of access to the courses and the BitLab indicators, the trading suite that we've built here, which, you know, we go over in quite a bit of detail throughout the streams, as well as a lot of the free stock, very useful indicators. So if you don't have our indicators, I still want to make sure people know how to use MACD, RSI, money flow, volume, all these things. So put a 1 in chat if you like the new setup with this hex screen that we got right here. As you can see, this sort of hex camera. I saw a couple people ask if there's some times we can basically turn the camera off so you can see everything on the screen. So I went ahead and made that adjustment for you. So let's get to the show. And again, make sure you hit that like button, hit that subscribe button, ting that bell. Let's go ahead and jump into it. Man, tickling my nose. All right. So let's go ahead and look at the charts. Okay, we got, we're getting a bit of choppiness going on in the markets right now. Okay, we broke above this massive trend line. Let's go ahead. What do we always do? What do we always do when we are looking at charts? First, I'm going to double click on the chart to hide these indicators. First, what we can do, and I'm going to also turn off the line. Okay, I'll just leave it as it is. But we can see we're in this massive falling wedge, okay? And what do I preach every stream? Every stream I preach that we need to make sure that we are understanding exactly what's happening within the market cycle. And then to understand what's happening within a market cycle, you have to do what I call the 3-cycle strategy. You need to look at the macro, you need to look at the midterm, and you need to look at the micro, meaning, the monthly or weekly. Then you can start zooming down to the 3-day, the 1 day for midterm. And then you get even deeper resolution after you've looked at these larger time frames, looking at that 4-hour, the 1 hour, the 24-minute, whatever it is, whatever it fits your trading and investing style. Some people are just looking for entries to find this low point here somewhere in this region to ride all this up and get out somewhere here, and that's the only trades they make. Some people only buy and hold. You're just trying to figure out when you can buy with confidence. And some people are trading, on a 5-minute chart, and they're doing, 10 trades a day. So you have to identify what your trading style is, what your trading plan is, and what the structure is you put around that so that you can engage with the markets productively. Man, I'm so excited today. Guys, I slept so well last night. I did not sleep well the Sunday night, and then we had meetings all day yesterday, because it's not just us being here on stream. There's a lot of planning that goes in. I think we got 50 or 60 employees here at Hit Network, and every one of us has about 300 hours of work to do every day. So in order to bring this to you. So we do appreciate it. And the easiest way, best way to support us is to hit that like button. It really does help. So let's continue this on. So one of the things I do want to identify here is this chart that I put out this weekend. I've talked a lot about the Wall Street cheat sheet that basically breaks down what and I'm going to go ahead and turn off my thing so we can look just at the chart. We talk about the Wall Street cheat sheet, where we talk about, having disbelief and, relief rallies, and we're getting, sort of euphoria, and then greed, the emotionality within the market. Well, I thought it would be very productive for everybody, even myself, to map out Bitcoin. And this, by the way, this works for any asset. It doesn't matter what asset you're looking at, whether you're investing in oil or gold or Bitcoin or Dow Jones or in the ETF or whatever it is. You can take this to heart, looking at what's going on within the market cycle and where smart money's buying and accumulating at these lows where everybody else, retail, is so scared to buy. Well, smart money's buying at these levels. And most retail, especially when we're getting high adoption and we're getting large bull runs, that's when you start getting massive news media. You start getting massive news media pumping out all the stories about how high Bitcoin is. For instance, when we broke above previous all-time high, we started getting some semi-aggressive retail coming in that had no idea what they were doing, but at least they bought down here. And then you get the people that were reluctant and they think Bitcoin's a scam, but for whatever reason, they buy into this hype cycle and they buy at the very top, and then they think Bitcoin's a scam or Ethereum's a scam or Cardano's a scam because then the market crashes. They don't realize they're not taking into account the data behind the moves within the market. They're looking at this hopium, this, it's all over the news. When I call it the Uncle Tom, Aunt Linda indicator, or Uncle Larry, Aunt Linda indicator, when the people that never talk about crypto ever, your cab driver, somebody walking down the street, and you start hearing it all over the place, the barista at Starbucks. And I'm not calling any of these specific people out. I'm talking about the everyday person that is so far removed from crypto that then starts buying at these tops. That does bring liquidity into the market, sure, but what you're really doing, what they are really doing when you're buying at these tops, is you're providing liquidity to have smarter traders exit their positions, because in order for them to buy, somebody has to sell to them. So somebody's selling, taking huge profits, and somebody else is basically buying, holding the bag, and they basically have a lot more disproportionate long-term holders coming into the market, coming out of the market, coming into to exchanges to sell. And as they're selling, now you get this inverse relationship. You get an inverse relationship where the short-term holders start to outweigh the long-term holders. But what does this mean? Why is this relevant? How does this help me or help you make better trade decisions so that you can be in the profits more often and more consistently? Well, if your short-term holders are statistically proven, especially short-term cohorts that are brand new in the market, they have no conviction. That's why I put hype buyers with no conviction. They're buying, and the moment it starts to pull back, there's still some swing traders and scalpers that are taking this position and riding these moves. But large in part, what you're really getting is an overweight sort of top-heavy market that has people at the top with no conviction. So when you do get a small sell-off, then they sell, and it cascades. You get a bit of a push up because markets all move like this, where you get a push up, pull back, push up. And as you see, this is rolling over, and this is called a rounding top. And when you get a rounding top, that is, especially on the macro, and this is, of course, looking at the macro, when you're getting a rounding top, that's signifying that you're losing momentum, you're losing conviction to the upside. So that means the bulls are running out of steam. And if the bulls are running out of steam, and you start getting momentum to the downside, especially when you have a disproportionate amount of short-term holders or people with no conviction, then that's when you get these massive, that's when you basically build these large downtrend structures like this. And as it gets lower and lower, what happens is we get smarter investors, longer-term holders, long-term mindset people buying the blood in the streets, as Warren Buffett calls it. You don't buy the hype. You buy when there's blood in the streets, because when everybody, Bitcoin is dead, all these stories that come out around here, and everybody talking about how Bitcoin's a scam. It's honestly just absolute FUD and absolute ignorance, because the way Bitcoin, for instance, is engineered, it is engineered in complete contrast to the fiat system, in complete contrast to the US dollar. Bitcoin is programmed in terms of the exact supply dynamics, and demand is not programmed in. However, the fact that this is such a better engineered monetary system, and the use case, the fundamental developments that have happened over the last 12 years, and even in this entire downtrend, we're having increase in transactions across the chain, exponential. We're having increase of adoption. We're having, of course, there's a huge developments on the Lightning Network, which is making it a lot easier to transact more quickly and for very astronomically cheap comparatively with any other sort of monetary rail out there like Visa or MasterCard or Western Union or any of these Swift, any of these remittance rails that monetary systems have transacted on in the past. So we're looking to be this smart money and find these opportunities, but be aware we're going to need, and this is what I was referencing earlier, we're going to need a pullback to confirm this move. You need a push up, a pullback to confirm the move. And why does this confirm the move? Well, the pullback essentially says, okay, the bulls push up, they take profit at a key level. In this case, I do think we have a very good shot. Even right now, if we pull back to 19.6 or something like that, fine. If we continue pushing from here, especially if we get good news, this week is so big in the markets because of so many big earnings reports within the FOMC with the Fed rate hikes coming out Wednesday. If we get if we get the 25 basis points hike and we get positive earnings on Google and Microsoft and Amazon, there are some rumors that they might have one of the first, it might be first ever or first in many quarters, not positive earnings report. There's a lot of data we need to pay attention to here and key levels because we need to have the bulls push up. Whether it rejects here and confirms it goes back up, we will be essentially forming a higher low. And what that means psychologically with the push up, the confirmation, and then the true breakout is this is not a bull market yet. Where we're at right now, this is not a bull market. We need this to pull back somewhere. We need this to pull back, whether it pushes all the way up to this level here or gets rejected where it's at and comes back. This is saying the bulls are taking profit. The bears come in and they do their damnedest. They do their best to bring the price down. And if this is a bullish confirmation of a true start to a bull run, then what will happen is as this rolls over, as this price rolls over, the bulls see the opportunity rather than being fearful, waiting for a lower price. Because the sentiment, the data, the fundamental, the institutions, retail, start to come in, the bulls, the bullish cohorts in all those categories, and they reject the price, they reject the bears being able to push it lower. They form that new higher low. And then once you're breaking out from there, that's the true breakout when you break this level right here of this previous high. In this case, is at 23,950. So just basically, once we break 24,000 with any pullback here, and I wouldn't consider this a pullback. This is just some consolidation. Once we break this level after any sort of pullback, or if we push up to 30, we could also do this and pull back all the way, down to 23,600-ish or anywhere in this level. It doesn't matter. That's also a new higher low, and we have this confirmed breakout. We have a confirmed bull market coming in. So the whole goal here is we want to really utilize the charts. We want to utilize the data. We want to utilize the signals that are available to all of you and everybody else out there. It's available to you so long as you understand to look for it and you understand, and you understand how to integrate that into your trading strategy and wait for the market to come to you rather than you chasing the market. Because every time I've tried to chase gains, that's when I've essentially donated my money to somebody that's a lot smarter in the market. And I don't want you to do that. That's what this is all about. So what are some of these signals that we can look at right now? Well, one of the things, I just brought it up a second ago, we can come over here to marketwatch.com. If you come here to economy and then come down here to U.S. economic calendar, we can see on the schedule this week, we've got all kinds of great stuff coming in. Consumer confidence index, did it already come out? Oh yeah, it came out. So this is good. Consumer confidence index went down a little bit. And this is to be expected, I would argue, because of what's happening with all the earnings this week, as well as, this huge question about whether or not we're actually going to get a recession or not. That's still what I mean by recession is a recession as they're defining it now, also including unemployment and other metrics rather than just the price pulling back. But we also have, rental vacancy rate, that's down. We can start looking at this data. Now, this tomorrow is going to be a really good sort of forecaster this ADP employment report. Well, what is this? ADP is a massive payroll processing company, massive. I think they're the largest in the U.S. at least. And so they have a great sort of pulse on what's happening in the market in terms of employment and unemployment. And this ADP employment rate will be a great forecaster to, I think it's later in the week. Non-farm payroll is, I'm not sure when it is. Non-farm payroll and also unemployment. Here we are, Friday. So this is another huge metric that, whether or not you understand it, major players in the space, smart money institutions, which essentially the way they move, so too does the market. So retail can obviously cause a spike. We can also get a bear market relief rally. We can also get a form of a push-up that will only be rejected if institutions are not on board. So this is the kind of stuff that large institutional players are looking at when they're determining where to place their assets, where to place the capital that they have under management, or where to place the capital that they are investing out of their own treasury. And then, of course, Friday, Wednesday, we know we have the this right here, the FOMC, the federal fund rates at 2 o'clock Eastern Standard Time here in the U.S. And then 30 minutes after that, we have the Fed, basically the press conference as to, their thoughts as to what's going on with the Fed fund rates. Now, I do want to mention, I had this conversation with somebody in office earlier today while they were putting together the news stories for BitBoy Crypto. We're talking about this. One of the shockers that I think is possible, I don't think it's super likely, maybe 15% likelihood with the Fed fund rates is the CME group, where you can see where the open interest is betting essentially on a 25 basis points hike, a 0 basis points hike, or even higher than 25 basis. It's like 99%, essentially 100%. Everybody thinks it's going to be a 25% basis point hike. Now, this week is not a week that I'm trading. I've done some DCAing, and it's stuff that, it's a long-term plays that I'm allocating capital to. So I'm getting my portfolio in position for the bull market. Now, the FOMC meeting could be a game changer for the markets this week. In addition to these massive earnings reports from Amazon, Google, Microsoft, ExxonMobil, I think is today or it was yesterday, Pfizer, there's a huge list of massive earnings that are coming out this week. So those paired with the FOMC meeting and basically seeing how much expected goals or behind them is going to have a huge impact on the market. In addition to that, we have the FOMC. Now, one of the things that a lot of people in the space, we look at is when everybody's betting on a certain direction, that's typically where the most pain can happen. So what would happen and how are you preparing for a potentiality if it's not a 25 basis point hike? What if it's a 50 basis point hike, which is 0.5%? That would shock the market. Now, I think my argument around this is, and I'm not saying I think this is going to happen. I think it's got about a 15% likelihood. However, if it were to happen, it would cause, I think, temporary max pain, especially in that moment. The markets would go, it would tank so hard. However, I think what would happen is, if that were to take place, I do think that press conference at 2:30, 30 minutes after the numbers came out, would buoy the market, because I think what they would do if they did a 50 basis point hike, they would come in with very dovish, a dovish agenda, dovish talking points to basically soften the blow. And maybe they could say that it's, this is all speculation at this point. Maybe they say, we did a 50 basis point hike so we could get this out of the way and not do another 25 basis point hike. And this will be our final hike. That's something that, potentially could happen. And the market that would alleviate some of that downward pressure on the markets. In fact, I think that would almost neutralize it if that were the case. So my whole point with all this is, this data is going to have a major impact on what happens in the market this week. And it's our duty as investors, it's our duty as retail, it's our duty as traders to protect our capital, to understand what our time horizon is. If you are a trader, absolutely stop losses. If you're a long-term investor, I wouldn't necessarily say you need a stop loss, but you need to understand what your time horizon is. And if you're setting up for what I'm doing right now, I'm setting up for the bull run. I'm not selling my positions right now. What I'm doing is I have my dry powder, my capital already on the side. It's already in my accounts on exchange, ready and waiting for any dips to any of the target levels that I have, so I can redeploy and DCA and lower my average entry, because I really do personally believe that we are somewhere in this area, somewhere in, as I mentioned on this market cycle cheat sheet. I'll do it on this actual price action. I do think that we are somewhere in this region here. Whether we're having this and we still have pullback and then we'll go up, or we're already at this disbelief. That's yet to be seen. So what I'm doing is I am ready to deploy. I'm not saying you need to do this. This is not financial advice. This is my strategy. I am deploying anytime we pull back to any key levels I have marked out. So let's talk about that. We're going to first look at Bitcoin here on the US dollar. And then what I'm going to do is we're going to look at some of the signals that we're seeing here. But then what we're going to do is we're going to look at some altcoins in an alternative sort of lens, so we can prepare ourselves for setting ourselves up for as much profits as we can drive. So looking here on the macro, we're on the weekly. Let's go. We're all aware of this. We got this massive falling wedge. And we can also see we're pushing up kind of near this 200-week moving average, which if we get above this, that's essentially, we can zoom out here. Other than this COVID pandemic crash we had right here, once we get above this, and this I believe would likely have pulled back, found support here if we did not have the massive economic catastrophe. But once we break above the 200-week moving average, it's very bullish. It's all bulls on, and we're going up. We can see that historically has been the case. Now, when we zoom out, we have broken out of this resistance, massive down trend resistance. But let's go ahead, let's go to the midterms, go down the daily. Now, what I want to do here is we can do this live on stream. I want to show you how I'm picking out my targets for where I'm setting my zones, if you will, of entries. Now, if you haven't yet, I do want to shout out. I did put this out on Saturday, or I think no, I did it yesterday. If you come here to the daily alpha series, I did this pro trading view guide. Definitely watch this if you haven't yet, because I do a lot of quick keys and basically easy ways to set up your charts so you can master them with templates. The quick keys, from option J, option H, option V, option F. So you don't have to come over here and use all these two, option T. So we're going to use some of those today, and I'll shout them out again, but definitely watch that video. So zooming in here a bit, we can see that we've kind of tested this massive downtrend resistance, but we're kind of consolidating here. And the first thing I see without even zooming any to tighter resolution, if I do option T, if you're on a PC, it's Alt, we could see a sort of option T. We're just marking out some trend lines here. This is basically like a megaphone, an expanding channel here. Broadening wedge. Sorry, I drank coffee too quick before it came on. Now this, and especially the shape of it, is inherently actually a bearish pattern. Okay, and what was I saying before? We still need to prove the move. This was not proving the move. This definitely is not proving the move. We need to see price action, and I won't even call these little wicks just dancing down this downtrend resistance. I wouldn't call that the proof of the move either. I'm looking for this to come down at, like, with actual candles, not wicks, come down and find support on this downtrend resistance, flip it to support, and then come up something like that. Or what will most likely happen, because the market can still be moved massively by institutional players and market makers, because the Bitcoin right now is around $400 billion, a little over $400 billion market cap. And so although that seems big, when you compare it to gold or housing or equities or Dow Jones or any of these traditional assets. These are multi-trillion dollars. Gold alone is around $11 trillion, I believe, 11 or $12 trillion. So this is very easy to move, and they break structure from what the traditional TA says should happen in terms of this. If this was a larger market, it probably would come down like that and find support on that downtrend resistance. But what I think is more likely to happen is just to break this, get a lot of people going short, find support maybe at this level here, and then moonshot from there and really start the bull trend, because this is only but one ingredient of a bull trend, and this is just the first leg up. We need some sort of ABC correction down and then another leg, but either way we need to prove this move. So how do we figure out what these levels are? Well, of course, one of the things we always do is we go to the macro and we do our mapping of key levels, and I also have these red lines here, which are spider lines, which I essentially have projected out from the this sort of these highs and we tend to have an A, B sort of bull market, almost like a relief, a false sort of bull market within the larger bull market that pushes up, pulls back, then goes off. I think we're going to have the same thing here. But my point is I have these spider lines drawn from this sort of point off this fulcrum here, and it's given key sort of zones. And what I would do here is one, very, very productive. If you're not using it, you absolutely should. And I'm going to do an entire video on Fibonacci's. And also in BitLab Academy, we have a whole section on Fibonacci's as well and how to use them. But what we can do here is identify these sort of price point, these levels of interest from previous price action resistance. This kind of broke through, but fell right back through resistance. So let's go ahead and pull this out here. We have this sort of resistance, support, and also obviously that we got price action all in the zone right here, so we can extend that out. But what we can do Option or Alt if you're on PC. On Mac, it's Option F. Click down here at this moves low, and pull this all the way up to the top here. And as you can see, we have this golden pocket right here. I feel like this is, let me go ahead and, okay. Oh, you know what? Yeah. So we have this golden pocket Fibonacci, and if you want yours to not have all of them, all you need to do is come in here. You can turn. So I was doing that chart the other day, so I kind of cleaned it up a little bit. So let's do it right there. 0, 1, 0, 1, 618, 65. This is the golden pocket. You have to add this one in. It's not going to be standard in there. You can just come in here and change one of the values to option 0.65. I like the 786 and the 618 just for extensions. But so we could see we got a key level right here. If this were to kind of trickle down, this is an excellent target. We can come over here to No, it's where is this guy at? I don't know. Okay, we'll just go here. We could see this sort of level right here, this 21,000. If this were to sort of trickle down here, because it doesn't have to be a very fast move like this. It very well could, kind of work its way down, and this would be a perfect point of confluence if it was at the 382 retracement on the fib, or even coming straight down, finding support here, because this is also interesting price action all the way through here. So that's one of the levels that I have, this sort of zone, if you will. I have a zone, and I'm going to press this star. If you guys don't know, if you come over here and add stars, you basically get a favorites bar right here, this star, and then you can have the stuff you use most often on a bar right here, so you don't have to go over here, because some of the stuff you can't quick key. Like I like this rectangle right here. We can see that there's been interesting price action right here, and it's right about the 382. So I'm looking for a pullback right here at this zone here in confluence with the downtrend support, which is at 21,000, basically 21,006, which would basically 21.4 to 21.7. 750. This whole zone here is an excellent option in terms of looking for targets. This right below that, which would more likely be a wick if it just comes to here, and that's the 21,000. And then if we're really having a shakeout, especially with everything that's coming this week, we very well could get a lot of manipulation, a lot of forced selling that causes a long squeeze that then causes a very quick cascade down, which is like this right here, this very quick move down to this level right here, which is within this other price action box that I have from previous price action, and that's at the 19,264. I'm not. This is a lower probability for me. I do have some orders set in the zone, but that's how we're mapping out where likely zones are to come, because this is not only a golden pocket. Look at where this, if I were to extend this out, look at where this golden pocket also is in confluence with. All of this previous price action support, bounce, a lot of interaction in this level. If we come over to the indicators and to do VPVR, which is the volume range of the visible range of the volume profile. And what I like to do is I like to double click on it, come to, row size 200. Yeah, there we go. Now we have a lot more resolution. I don't know why it still has the, go ahead and delete that. Okay, well, we could see that there's right at the zone 2 is also this sort of node right here, high volume node that would also be support for if this were to come down, not only in confluence with the golden pocket, but also with previous price action. And of course, there's previous price action here. That's why there's a lot of volume that was traded at that level. Now, of course, if we lose that level, then we don't have much support until we get all the way back down to near previous lows, still above it, but in the 16,000. Right about 16,700 range. But I'm looking right here at this level, the 21,000 range all the way down to the 19.2. I have more orders in the 19.6 range. And that has just to do with previous price action this level, as well as on smaller time frames looking at other fibs. But these are the major levels that I'm looking at with Bitcoin. So I'm going to jump back over to chat right now. How's everybody doing right now? Let me read through chat. Let me see what you guys have. Let me see what's going on. Everybody, if you haven't yet, please hit that like button, ting that bell, hit subscribe, join us, join our community. We're doing this every day, talking not only TA, but also, how to use these various signals, how to use these various indicators. Not only are we doing live content based on what's going on in the charts today, I always try to work in a lesson that no matter when you watch this video, there's lessons within this, so it is evergreen. In addition to that, we are doing, I'm making every effort to film, as well as filming all these 200 plus lessons that we're about to start bringing to the BitLab Academy in the paid membership area. But on this YouTube as well, I'm doing, trying to break out a lesson from each daily stream and actually just do about an 8 to 10 minute video that I'll be releasing in the afternoons. That's straight to the point, and it is absolutely evergreen. It doesn't matter what the price action is doing. What we're talking about is concepts and how you can move in and out of the market most effectively. So, welcome. I'm so happy everybody's here. Everybody put in what the last two DCA coins, the last two coins you DCA'd into, and if you're up or down, because we want to get everybody, we want to get it to where everybody is up, man. That's what this is about. You've got to be able to weather it. If you are down a little bit, and if you don't have good risk management in practice, then you're going to be down a lot. So that's what this is all about, is going through all the skills, but also remembering that you need to take profits at some point in a cycle, unless you're just buying and holding for 10 years, in which case there's no real need to if you're not trading or investing at any step along the way, didn't really do you a lot of benefit to, learn trading other than finding an entry. But if you've already got your entry, everybody, all of us, I would argue, could sharpen our skill to find better entries and have better risk management to protect our capital and learn how and when to take those profits. So let's go ahead and jump back into the charts. I see Algo and BTC, Casper, HBAR, Link, ADA. All these are great coins. XRP, I talked earlier today. I'm going to be looking to DCA a bit into XRP. So of course, and Matic, of course, Gala, absolutely. Everybody go ahead, in the chat, put in what your born on date was. What I mean by that is around what month and what year did you make your first purchase? I don't care if it was $5 or $5 million. You don't need to say what the amount was. You can keep that private. But what was a month and year that you got into crypto? And what is one thing that you wish you learned earlier? Maybe you've learned it now, maybe you haven't. But what's something that you wish you learned earlier? I'm taking note of all these things because I'm trying to build the content on this channel around what it is you all want, what it is you all need. Because this is not about me. I am here sharing my experience so that you don't go through the pitfalls and the idiocy that I basically went through. So let's go ahead and jump on into the charts. All right, so what I want to do now is we're going to go through some coins, different altcoins, and I'm going to touch on some of the ones that we have here that you all put in. Can't do all of them, of course, but I want to look at this with the concept of stacking and building our portfolio so we have Bitcoin gains. And how do we do that? Well, we can come over here to the top left, and for instance, let's do algo. And instead of doing it, Wade, even if you trade on the US dollar or whatever currency you trade the pairing to on your crypto, even if you're using that for your signals, I want to challenge you to also come over here, put in your ticker for whatever crypto you're looking to get into, and then come down to algo, in this case, BTC. And I want you to start taking note of not only the 3 market cycle, but integrate at least once a week. It doesn't have to be every single day, but at least once a week, integrate part of that macro, midterm, micro to also the BTC pairing. So you can find a good entry on your fiat pairing, fine, if that's what you're trading. But you can also come over here and look and identify coins, because say you like algo, say you like Matic, say you like Bitcoin, say you like Ethereum, say you like Cardano, fine. When you're DCAing each week, it doesn't need to be in this same coin every single time. You can spread out your DCAing within your diversified portfolio. But what you can also do is DCA into the coin that has the charts that line up, that show it has the best setup for potential profits in that time region when you're DCAing. So you can look at that macro, midterm, micro on your dollar pairing or wherever it is, but come over here and also identify which ones are also set to break out against Bitcoin. So we can come over here, we can see, let me go ahead and turn off the VPVR. I don't know why there's 2 up. And we can see here, we want this to also be going up against Bitcoin and set up for a breakout against the US dollar. In this case, we can see we have, let me go, we're on a daily, let's go to auto. What we can do is we can just do our basic sort of strategy here. Option T, we got a bit of a trend line here. Option T, we got a bit of a trend line. It's actually kind of through here. I can see there's a bit of a channel. We've got, when we zoom in a bit, we've got a bear flag here. And it's a bear pennant, really. So we can start looking at all these sorts of things. Similarly, if we come over here, oh, look at Cardano. Cardano was ripping on the 1 hour. Let's see. I want to go to, we're going to option. We're going to option. If you have multiple charts and you have option, you hit option and click on your chart, it will bring up to the major chart. So let's do ADA. Also, I'm just using these as a comparison. BTC. And we can see Bitcoin is breaking out against Bitcoin and it's breaking out against the dollar. So when you're looking for your trade entry, you can do your TA similar like you do on your fiat. You can set up your levels. Let's do option J for a horizontal ray, and we can see as soon as this broke out, coming back to where we just were with the US dollar pairing. We can see similarly that was a great entry for not only Bitcoin, not only a Cardano against Bitcoin, but Cardano against the dollar. So that was a really excellent setup, especially when you're trying to increase the Bitcoin value of your portfolio. Because when I'm looking at my coin trackers, my portfolio management app that I use, I want to see it going up in dollar value. Yes, but I'm more concerned, especially in a bear market. I want to see it really all the time. I want to see that Bitcoin value of it going up over time. So let's go back over to Algo. And we can see right now, Algo has been in a bear market on the US dollar and against Bitcoin. We have this bit of a bear flag here, but it's on this sort of longer term trend of support, which this obviously kind of broke out here. This was a bit of almost an inverse head and shoulders, not quite, but we're on this massive sort of much longer time period. I mean, this is a multi-year time period. So let's go ahead and zoom this down to, I'm going to go down to the 8 hour just so we can get better clarity. And I think this is, I wouldn't necessarily call this great entry on this pairing for Algo because we are specifically on this trend line. What I'd like to see is this to get a little bit closer to this apex, maybe a few days, and come up here, test this line of resistance, break out, confirm this move, and that would be a great entry. And weighing that against the US dollar pairing USDT. Show charts, Kelly. Man, I did that again. I have this new stream deck that I had to reprogram all the buttons, and I must have hit the wrong one. My apologies. So what we were talking about, I changed it. There we go. So what I was saying here is when we're looking at ADA, we can see on the US dollar, this is what I was saying. You can see on the US dollar, this sort of structure as it's rounding about. We have a push up, a higher low, and even on the BitLab trading indicators, we can see we had a bullish divergence on the hidden volume. We had a couple of these pushed to the downside, sort of setting up a lot of sort of tension. It keeps trying to push down, and the bulls say no. This is trying to go higher, not lower. And we have this massive, basically trend floor, which is what this blue wave is. And so when I'm looking at this for a trade entry, what I was saying is we can come over here to the Bitcoin chart as well, and you want to see if you're DCAing, if this was a good entry on the US dollar pair, how is this looking also against Bitcoin? Is it moving more aggressively than Bitcoin or less aggressively? That's essentially what you're weighing. Are you going to be earning dollar values in addition to Bitcoin value? That's what I'd like to see. And we can see here we have this downtrend resistance here. A lot of previous price action support on this sort of entire zone. Let's go down here to the star, bring up the region, and we have, once this is finding support, once this broke out here, this is set up. This is actually somewhat of a bearish structure because it's a descending triangle where we have a flat bottom here. These break out to the downside a lot, but as soon as it's pushed up to this line and broke through it cleanly, that this, in addition to what it was looking like on the US dollar pairing, that this was a good trade entry. So now coming over here on Algo, we got this on this basically bear pennant. However, this is also pushing down directly into this long multi-year sort of trend support, and we can see that on the 3-day, and this is a descending channel. Now this is this tends to be a bullish pattern. So if we pull this up with actually our charts, so this is the BitLab charts. Let's come down to the 8 hour. And we can see it's a lot of choppiness with the bullish and bearish divergences on, okay. You guys can see the charts now, right? You should be able to see the charts. I apologize about that. We have some bullish and bearish divergences back and forth on the volume here, but look at this. If we zoom in here and come over, we can see on this right here. This is like it's trying to like slingshot. See, this can push down far, but it's within this yellow wave that's over. This yellow wave is like the mean, and when these bars, this is a relative extreme, a part of the BitLab indicator trading stack, which you can find over here on bitlabacademy.com/indicators. But we can see that this is way out of the norm. So although price didn't push down much right here, even when it was finding support, look at how far these bars are out of. So this is like essentially saying the bears are really trying, but the bulls are more dominant. That's essentially what this is saying. And this is saying the bulls are really trying, but the bears are more dominant. So right here, this peak out of this cloud also came with the rejection tied to the BitLab market intelligence, where we're seeing RSI divergence, MACD or momentum divergence, and money flow index divergence. So this is a lot of bearish divergences coupled with in the bearish divergence. And divergence is essentially saying that there's data coming into the market that doesn't agree with the price action. So this is pushing up while the strength is actually reducing. There's less pressure on the market to the upside, indicating that a reversal is likely to come, or at least a trend up pause. In this case, we have 3 bearish divergences. We have a high, as we can see here, marked out within what's happening with the candle structures, and we have this huge sort of push out of the cloud. So that indicated this was coming back. Similar here, this indicated that this was likely finding a good support here on this trend line support. We do not have a blue wave, but this coupled with the money flow divergence, coupled with this trend support, is a good indication that this is trying to bounce and come to the upside. So now we can come over on algo. Now we can come over to and look on, because this looks like it's setting up we have to consider the macro trend and Bitcoin starting to reverse over. That's going to pull the structures on a lot of altcoins around too to start coming more bullish. So although this may be a bear pennant, this is multi-year support that it's coming down to. Even if this were to wash down a bit, I think that now we need to see if algo can sort of, if algo on the dollar has very strong bullish structures, then this is likely to reverse out of this and come to the upside. So we can come over here, we can come to algo USD. What time is it? We got about 9 minutes left. Alrighty. Just so you guys know, I don't know if I'm succeeding whatsoever, but I'm trying to talk a little bit slower. I had a couple people that were on the other side of the pond say I do speak a little fast, but I do want to point out, when you are watching anything, you do have the ability to when you do have the ability to come over here. We have this live right now. Let's go ahead and mute it, and we can come right down here. You can turn on closed caption. The closed captioning will be available after this is done being streamed. But you can also come here to settings, and you can slow down the playback speed or speed it up if I'm talking too fast or you're trying to watch this later very quickly, just so you know. So at algo, we're talking about, is this going to rip against Bitcoin? Well, we can see also on the same time frame, now we have a bullish divergence here on hidden volume, and volume is one of the best indicators to use when you're trading, because you're seeing when pressure is actually coming into the market in contrast to price, or coming out of the market in contrast to price. In this case, price is falling down, but we're getting a lot of increase in volume. Well, why does that matter? Well, because if price is falling right here and volume is coming in to this support level, that gives indication that there's a lot of interest at the support level. Now we pair that with this downtrend. Let's go to our macro. I'm going to delete this Fibonacci. So go to our macro. We have this massive downtrend support, resistance support, and we're kind of testing it right now. So let's come back down to the 8 hour. We're finding support right there on previous price action. This ray I have right here, this goldish ray. And we're getting a bullish RSI divergence. We're getting a bullish hidden volume divergence. The relative extrema shows that the bulls, the bearish move is out of context, and the bulls are saying, no, we want to pause here and likely reverse. We're also looking specifically at and today I'm recording a bunch of videos for BitLab Academy on exactly how to read candles to understand momentum and trend reversals. So we can see we have increasing momentum because these candles are getting bigger, but we also get a large wick. Now we have a doji candle, or a spinning top, basically showing, if we zoom in on this, we can see that essentially it's like I'm going to turn this off so we can actually see the color. The body is It's, you know, it has an equal wick and an equal on top and bottom. And the wicks are these. This is how far prices travel to the downside and how far prices travel to the upside. And then the body is where the candle opened and where the candle closed. Okay, so we can see this is indicating massive downward pressure. Except now it's indifferent because it's neutral, meaning it's no longer bearish. This is neutral. But in a downtrend, when all of a sudden this flips, meaning bulls came in to meet the pressure of the bears, now we can look for a potential move up. It doesn't mean it could very well pause and continue down. We know by the next candle and by looking at this signal right here, the likelihood is probably to the upside. Now look at this sort of, you have to be very careful and patient with markets, because if you got in right on this candle with this bullish divergence and with this relative extreme out and with the start of the blue starting to form here, and you get out because you get this washout, Rick, then you're donating your money to people that have smarter trade sense. Have your stop losses set, do whatever you need to do. But we can see, I would wait one candle and see what that candle defines. Does it agree with this move? And then how are the signals in confluence with it? Well, in this case, we got this massive try by the bears. The bulls said, absolutely not. We're getting pushed up. And now the candle opens and is moving up from here. And we're still seeing a little bit on the relative extrema with this, saying that the bears are still out of their minds. The bulls are trying to basically win this over, and they're doing a better job at it. Now, when we look at the same sort of move using MACD, RSI, stochastics, I'm going to zoom out. Almost there. Almost there. There we go. We can see right here, you can see that the red bars are getting bigger, and now they're rolling over, meaning the momentum is shifting in context with also this rolling over here. RSI did break below the 50 line. It's right down about the 43 line. So the question here is this only going to be a relief, or is it going to push up? Well, we already saw on the Bitcoin chart that it is in a constricted sort of bearish pennant. And on the US dollar, this is also, this is not showing a lot of strength for the bulls, although we did find support. I believe this is the 55, this is the EMA ribbon. Which one is this? No, it's not, that's not the EMA ribbon. This is the 4MA. So that's the 50. This is the 50 moving average here on the 8 hour. This is finding support. But what we need to watch for, this is going to be key, option F. Anytime when you have something like this that's starting to push up, and it's not showing a lot of super amount of conviction, we can see that the Fibonacci on this one is 25 cents. So on Algorand US dollar, this can push up all the way up to this level and still get rejected and pull back. And that would be in context, obviously, honestly, not obviously, that would be in context when we were looking at Binance. This is in this sort of this trap here on this chart. So you can utilize these various charts and these various signals to understand what's going on. And also remember, the biggest signal in the market right now, more than all this, the driver's seat right now, is all the economic data that's coming out this week, all the economic data coming out with all the earnings reports, what the heck Jerome Powell and the Fed are going to do. And so it's really important just to be patient and let these trade setups come to you. Let these trade setups come to you. It's all you need to do. You could be DCAing. I'm DCAing in at these levels every time we get a small sort of pullback to my key levels on Bitcoin, Ethereum, Algorand, Cardano, Gala, HBAR, XRP, the Graph. These are all coins that Filecoin. These are all coins that I'm interested in. Some I'm already in, some I'm not yet, and some I've just been building and strengthening my position. But the point here with all of this is to have a plan. Have a plan. And just again, I want to shout out everybody that's been tuned in here on BitLab Academy on our daily streams. We do this every day, Monday through Friday, 10:30 a.m. Eastern Standard Time. You can watch these at any time. Today, of course, I'm doing very, very price action heavy, but what I really want you to take note on this is the concepts and the strategies and the practice, the plan of action and the actual actionable sort of steps that I'm sharing here, because you can watch any of these live streams even in 6 months, and take the concepts and the strategies from these and apply them to the current market, what's going on with the current market price action. With those 8 to 10 minute videos, those are truly meant to be evergreen videos because they're teaching you exactly how to engage with the market in the most profitable way, and the tools, how to use all these various tools. So go ahead and type in the chat here. What is one stock indicator? You know, when you come in here and you have all these free indicators that you can search through, RSI, MACD. Put in one indicator you wish you understood how to use better. But this is something I'm going to be looking at so that I can make some content around that as well. But also, also tell me where you think. At the end of this week on Friday, tell me where you think, what price level, give or take, let's say $500. What price level do you think Bitcoin is going to be at? What price level do you think Ethereum is going to be at? What price level do you think Cardano is going to be at? Throw that in chat. Let me know. I'm curious to see. Let's see. We can all hold each other accountable here. Nobody's wrong, right or wrong. This is all, using our sort of skills, looking at the charts so that we can sort of engage with and hold ourselves accountable to what our projections are. Because if we're not even projecting things anywhere near the area that we think, anywhere near where the price action goes on these different assets, then how are we supposed to trade them? Okay. So, that's all I got today. I hope you all have a wonderful day. Please hit that like button, hit that subscribe button, ding that bell. And if you would, make sure to go to bitlabacademy.com. Again, my name is Kelly Kellum. I really appreciate y'all. I hope you have a wonderful, wonderful day. Whether you're watching here on BitLab Academy, daily YouTube, or through Hit Network, shout out to all you guys. Come follow the BitLab Academy YouTube if you haven't yet. We really appreciate it. Everybody, have a wonderful day. I will see you in another video. Adios, muchachos. Adios, muchachos. Thank you for watching. Put those trades in and be safe. Gotta make those profits and that money. Moolah, moolah to your face.